Looks like General Motors CEO Dan Akerson is playing hardball ahead of negotiations with the Canadian auto workers. Earlier this week, he noted that Canada is now the most expensive place in the world to make cars. Although it comes ahead of contentious contract talks, it raises the question, is Canada competitive enough for the global stage? Time to look at the big picture. Goldie Hyder is General Manager at Hill & Knowlton Strategies. Bill Robson, President and CEO of the C.D. Howe Institute, and Erin Weir, an economist with the United Steelworkers of Canada. Great to have you all here.
Good to be here.
A real shot across the bow on a real wage basis. We are no longer competitive. We saw Caterpillar close down a plant and move it to Muncie, Indiana the next day. Goldie, are we in danger if we don't actually have a rethink about the wage situation of losing more manufacturing?
Yes. Absolutely, we're in danger, and we need to pay attention to what's being said by this CEO and other CEOs. This is about globalization. Ultimately, it's about competitiveness. You know, our dollar's gone up, so people want to use the dollar as the excuse, but the reality is if you took the dollar that gone up and put it into innovation and technology, that would help. I think that you have to recognize that when the costs are this high, ultimately the consumer pays. We're paying more than we need to. And Minister Flaherty has raised this, not necessarily with cars, but he raised this about CDs and books and other things, saying, why is that the reason? And he's in fact asked the Senate committee to look into it. And you'll find that the reason are we pay a lot on tariffs, we pay a lot on transportation costs, we pay a lot on utilities costs, and guess what? We pay really a lot on wages and the benefits that are attached to that. So those are the things that have to be put on the table.
So Goldie's brought up the 800-pound gorilla, and we know what that evil is. Bill, let's talk about it now. Let's get it out. Unions are killing us here, killing us, making us uncompetitive, wiping out the auto industry. What are we going to do about it?
Let's bring in Erin because, of course, he's the only one here who's actually part of a union and is facing these issues in real time. Erin, are you guys to blame? Are you the reason that we're going to lose manufacturing to other jurisdictions?
Well, no, this concept of competitiveness is about differences in production costs between countries. And I think it's worth pointing out that the auto industry is also highly unionized in the United States, Europe, and Japan. So it's pretty far-fetched to sort of single out unions as the cause of relatively higher costs in Canada. I think the real issue actually is the exchange rate. We're in a situation where it costs about 100 American cents to buy a Canadian dollar, but according to the OECD and other sources, a Canadian dollar only buys about as much as Canada as 80 cents would in the United States. So that's what's squeezing these manufacturers. It's nothing to do with unions, which are a force everywhere.
I just want to bring in Barack Obama. He's gracious enough to join us today. No, just kidding. He was speaking earlier today on the subject of manufacturing and what he calls a race for the bottom. Have a listen.
We'll never be able to compete with some countries when it comes to paying workers lower wages or letting companies do more polluting. That's a race to the bottom that we should not want to win. The race I want us to win, the race I know we can win, is a race to the top.
This is part of, he has a jobs commission, and this is part of a kind of a move in America to bring back manufacturing, to say offshoring for a race to lower cost labor made sense, but in fact what it does is separate your R&D from your manufacturing. It's not working. We're losing the very high-end jobs. Goldie, is that what we should be thinking about? In fact, paying our workers more, paying them enough to buy the cars, as Ford said years ago.
Well, if that's a legitimate question, why not the reverse? Why not bring down prices and pay them less? You know, we've already got low corporate taxes. We've already got low income taxes. We've got low consumption taxes now, the GST even being lower. I mean, if we can bring the cost of those things down, it's a chicken and egg argument, right? Yeah. It's a question of which comes first. I do take the President's point, though. Obviously, no one wants to be a part of a race to the bottom. You want to be a race to the top. But the way you're going to get there is not through a unionized environment that's going to force costs to remain high. The CEO of GM said himself, we're a business. We're in it to make money. We need to make money. And making money allows you to have jobs, allows you to go out and be productive and also to be a consumer. So, you know, it is a bit of a chicken and egg argument. I think we should be a part of a race to the top, and the way you do that is through innovation, through education, through R&D, and all those other things that these other countries don't seem to do, at least for now, as well as we still can here in North America.
I've got to take issue with one of the statements you made. You talked of us being competitive, but here in Ontario, where these automotive manufacturers are located, we have stalled out on corporate tax reductions. We are not at 25%. We are not competitive. In fact, we're going in the other direction. We're making it harder and harder to make an economic argument for putting anything here because this jurisdiction is remaining one of the highest taxed in North America. With one government policy here that's told you for the next 3 years they are not going to do anything to help you. All right, Bill, what do you think?
Well, Ontario is definitely the weak spot in the Canadian economic scene. One of the things that gives me a lot of optimism as I look at the overall scene is that business investment in Canada has actually picked up a lot. We're now spending more per worker on new capital equipment than across the OECD generally, and that wasn't true for a long time. We're narrowing the gap with the U.S. That's all good news, but it isn't happening in Ontario. And what worries me a little bit, I look at the profile of jobs, very high value added and wages in the resource sector, actually, and more overlooked, very high value added and wages in the services sector, and Canada's running a surplus there too. Yeah. But if it's in white T-shirts and some of the older manufacturing jobs, not very well paid and not going anywhere.
So, Erin,
can I just address Kevin's point about corporate taxes? I mean, I think it's important to note that the car companies, GM, Chrysler, Ford, are all U.S.-based companies. So they actually face the 35% federal American corporate tax rate on their worldwide profits. So when they repatriate profits from Ontario to Canada, they're paying that 35% minus whatever corporate taxes they've already paid in Canada. Yeah. Even with Ontario stopping its corporate tax cuts, we're still way below that threshold at 26.5%. And if we were to cut our corporate taxes more, it would just force those companies to pay more back to Washington, which wouldn't help Canada at all. So I actually think the car companies are a really good illustration of why it doesn't make sense to slash corporate taxes any further in Canada.
Erin, you've had a good run with this line, but I have to say any CEO who listens to that advice has to get some better advice. You reinvest here in Canada, you don't face those corporate tax rates. Who would be so dumb as to repatriate to the mothership when they could reinvest here for less? It's just not true. That's not how people
Well, the Internal Revenue Service statistics show that there are a whole bunch of corporate profits repatriated from Canada to the United States every year. So it happens. I mean, ultimately, these companies are making investments to get profits for the home corporation, not to sort of reinvest in perpetuity.
All right. Unfortunately, we've got to leave it there. I appreciate all of your time today. Great subject. Erin Weir, United Steelworkers, Bill Robson, C.D. Howe, Goldie Hyder, Hilla Knowlton. Great to have you all here.
Thanks for having us.
Still